There was something I just wanted to go over, and it's a simple thing, but it's a very important thing. A lot of times, simple stuff is the most important stuff. But a lot of times, say about the end of 2011, on the fourth quarter, when all the metals prices was going down, everybody was talking about deflation. I did mention this, but I just want to go over it briefly again. And something Mark Faber said, and in 2 words he said that I really picked up on: unintended consequences. Talking about when central banks print money. What happens is, and let's go over this little definition, the velocity of money. Basically, it's divide the total gross domestic product, the GDP, by the money supply, M1, to get the velocity of money. And the velocity of money is actually slowing down. What's going on is banks, big companies, and even people are hoarding money. They're afraid to spend because they're uncertain about the economy, they're uncertain about the future, so they have a tendency to hoard money. So in an effort to stimulate the economy, what the central bank or Federal Reserve does is to try to print more money to stimulate the economy, according to total classic Keynesian theory, because Keynesian theory, gold is evil, right? So gold is an archaic relic that's no good. Keynesian type thinking. So what they do is they print more money to stimulate the economy. But what happens is the banks and the companies, they don't want to invest because they're afraid of or uncertain about the future of the economy, and they want something where they hoard the money. They want to park it someplace. They hoard the money. But what happens after a time period is the dam basically breaks after a while because they'll see an opportunity, and then bubbles start to form. This is what Mark Faber alludes to. It's a very simple concept, but it's something that everybody was not looking at exactly. They were talking about deflation, and that's not correct. Now, actually, if you look at this chart, this is not a bad chart. It's going up to about 2010. But the velocity of money has been decreasing, and that's one of the problems that's going on. Even though Ben Bernanke has been, I know QE1, QE2 has ended. He's doing various things to expand the money supply, but a lot of people just don't want to lend the money out. A lot of companies don't want to spend. They don't want to invest on new projects and things like that. So the money's being hoarded. Now, one indication you could tell is, and I'm looking at these industrial metals and things like platinum, palladium. Platinum is now a little bit cheaper than gold again, which is highly unusual. The only base metal that's really recovered in price was copper. From 2007, 2008, nickel is down, aluminum is down, zinc is down, and lead is down. That's telling me, and now, when Mark Faber makes a statement that, he suspects the Chinese numbers about the industry, how well it's doing, I tend to think that because this didn't make sense to me. Why are the industrial metals so suppressed in price? And especially, yet gold was going up fairly well. That's telling you that they're fearful of the banking system. That's why gold went up. They're fearful of fiat currencies. But actually, the economy is fairly suppressed because all the industrial metals, even the ones that are industrial metals, have a dual purpose. They're precious metals and industrial metals. The price has not went back to like the 2007, 2008 highs in most cases. And we have a lot more money supply out there, so they should be increasing in value. So what's going on is there's not that much trade going on, and we also saw the statistics from the Baltic Dry Index. So that makes me even suspect this PMI Global Manufacturing Index. I wonder how accurate that really is, because that doesn't seem to jive with the Baltic Dry Index, where they're saying the amount of shipping that's going on throughout the world is almost collapsed. It's like the worst that it's been in almost 2 decades, even though it's over 2 decades, even though it's going up slightly. Something doesn't add up with all this stuff. Now, I'm going to go over something else with, this was in Germany, right? And I don't know if we're going to go into this type of inflation, but we can probably go into something that's unintended consequences that, Bernanke's printing money, and I know Mark. I really have a lot of faith in Mark Farber, what he says. I don't want to put the blame on him for everything, because if he's saying so much, but I'm kind of reading very well because it's kind of like my thinking. When he's saying Ben Bernanke is an academic, he's an academic. He's just printing money. He's printing the money. He's really hitting the nail on the head. And what's going on is that money's being hoarded, and it's not fixing the economy in any way. But what's going on is like we're seeing the same thing here. This was like the value of a mark, one gold mark in paper marks, and it actually gold corrected here. It was like the paper marks are getting stronger. Then it was steadied out for a couple of years. It wasn't doing anything, and all of a sudden it took off, and that is because the spending increased. All the money came out from behind the dam after the central bank was printing more and more money, more and more money. It was being hoarded, mainly by large banks, other banks, and businesses. But all of a sudden it came out. It came out just like a dam breaking. And this is what's going to happen probably. I think there might be some unintended consequences coming on that I don't think the Federal Reserve, the people that's running the Federal Reserve, want to really destroy our currency, but they might by mistake. They really might by mistake. Something else interesting that's coming up. I'm going to post a link on this. And this guy, he lists 358 resignations from world banks, investment houses, and money funds. Maybe a lot of people are aware of this. And he's listing from September 1st, 2011. So it's less than 6 months this happened from all these major world banks, investment houses, and money funds, where they're no longer in positions of the power. They left, or maybe something happened to them. So it's something like that. Could be a little bit of a drama involved with this, but I think there is something coming up. To me, this would be more of a red flag than anything. People were jumping ship, and we saw that other who was that again? I mentioned on another video. Forgot who it was already, but that public resignation where he was condemning other people that were in Goldman Sachs, like Lloyd Blankfein and stuff, and Cohen, saying that the culture changed and everything like that. That's another thing that indicates that there's problems within that Goldman, and he's trying to distance himself from that he's not a part of that. He's not a part of anything that was going on or any kind of wrongdoing. When he's making a public statement like that, and you add all these other things that have been going on in so many months, there's something coming down. So who knows? When the planets align, the whole thing's going to come to that's it right there. I don't know if that's true or not, but I always look at that as like a the planet alignments or whatever the hell it is. I always kind of look at that as like a curiosity, But I also know that a lot of people are involved in investing and playing the markets. They even have kind of going off on a tangent here, but there's even people that actually trade by lunar cycles, the moon cycles, and stuff like that. I don't know if they actually win money by doing that. Then they know something. I don't know if they do, but I'm telling you, that actually is a semi-popular thing. It's not. There's more than a few people actually use that. I do examine every little angle, so I'm not into that stuff, but I do examine every little angle. This is a chart on gold, and it is shaping upwards. You're looking at this. I'd have to say, if you're just looking at this chart, it seems like a no-brainer that it's going to go down to here, the same type of 1500 level, or maybe a little bit above 1500, a little bit below 1500 before it bounces again. And looking at all these resignations and stuff and how they glossed over Greece's default, like they're saying, oh, Greece is going to default, and all of a sudden they actually default and they say, oh, it's nothing. Something. It's like it seems to me they're hiding something. So I don't know what's going to happen in the next two. I'm suspicious. I am. I'm very suspicious. I could be wrong. Could be flat out wrong, but I think something's going to happen here pretty soon. and that's probably what's going to tank all the metals. And then Bernanke might, maybe some weeks after that, maybe he'll formally start announcing that QE is coming on, and then you'll see everything start to bounce back. That's what I'm thinking the scenario is going to be. And I also want to remind about this velocity of money. Very important concept, because what's going on, Bernanke is trying to stimulate the economy. He's not saying anything about QE, but the money supply is being increased in various ways, various little methods. The money supply is being increased. It's just that it's not being turned over. And that's really not, the inflation isn't there. But once it starts turning over, you're going to see rapidly increasing prices. Now, what I think is that little catchword that, or two words that Mark Farber said about unintended consequences. It could be something maybe not as bad as this, but it could be a lot more inflation than is expected, as intended. And I think that's a major reason to be holding gold and silver or any kind of precious metals or hard assets. Like it could even be copper assets or whatever, food assets or whatever, because I think this inflation thing is coming up, and it's not going to be strictly because of QE. It's going to be because the money starts coming out behind that dam, and then it starts flowing into the economy, and it starts getting exchanged, and it causes a it's going to be people speculating, speculatory bubbles. It's going to be, but it also could be on the average common man. What happens is, as that money supply starts circulating within the economy faster and faster and faster, people start spending them. They start spending their own money faster and faster and faster, and that causes the prices to go up. So you like to look even here in Germany. Very good lesson before, before even 1920. Looked like gold hit a peak. It was going up for a couple years. It hits a peak, drops, then it flattens out for like a while, then it's about the same peak again, and it's going up a little bit, then all of a sudden it takes off. And that has to do with this velocity of money. Very important concept. That is the unintended consequences of printing too much money. It doesn't show up right away, but once it starts getting out, where it starts getting turned over in the system faster and faster, goodbye, cheap prices. You're going to have hyperinflation.